journal entries. One is to find out the income tax payable, which is current year payable, and then find out the deferred tax, either assets or liabilities. Then the third tax will be income tax expense. So let's go back to my Excel spreadsheet. To find out my tax payable for 2013, I need to know taxable income of 2013. So this will be the total of all the transactions above $66 million of taxable income. Multiply by 40% of tax rate. So income tax payable, which is current year's tax payment, $26.4 million. How do I know deferred tax liabilities and deferred tax assets of 2013? I will go to total futures of tax liabilities and tax assets. Permanent difference will not have future effect, so deferred tax liabilities and assets do not include permanent difference, whereas temporary difference has future effects. So let me highlight 13, and we will look for the difference in 2014 and 15. So the first one, installment sales. It creates future taxable income. So that's a total of $4 million. For depreciation, it's a total of 21 future tax. For warranty, we already put $2 million of future deductibles as an asset. For assets, 2013, it will be the summation of $7 million there. So my total deferrable tax in the future as of 2013 is a total of the transaction above multiplied by 40% of rate. So my tax liability is 25 multiplied by 40%, 10 million of future liability. My deductibles in the future is the summation of all the above transactions and 40% of the tax rate. So multiply -9 by 40% of tax rate. My future tax asset is 3.6 million. These numbers are at the end of the year. So you can view this 1.2 of tax liability as the beginning balance of 2013. 10 million of liability is the balance of end of 2013. Same for the assets, beginning balance of 2013 and ending balance of 2013. Journal entry is to journalize the change during the year. The deferred tax liabilities, debit, credit. I'm doing a key account. At the beginning of the year, it was $1.2 million. At the end of the year, it is $10 million. Therefore, during the year, X equal to 10 minus 1.2, 8.8 million of increase of deferred tax liabilities, whereas deferred tax assets at the beginning of the year, the balance was, I don't want to have a negative sign in my T account, so I added minus sign. I had a 2.8 balance. At the end of the year, I have 3.6 million of balance. So during the year, my asset is increased by 3.6 minus 2.8, $8.8 million. Okay. I realized that this 1.2 is 2.8 for the liabilities. Sorry. And 1.2 for the assets. So now I can do the journal entries. Requirement 1. I have income tax payable, which is calculated from here. And I have deferred tax liabilities, which is calculated from my T account. I also have deferred tax assets that is calculated from my P account here. Then the last tax is income tax expense, which is the plug number. Total of my credits minus debit.